Aurora Cannabis, ACB. So let's take a look. This is by request. Someone asked for this a couple days ago. Just getting around to it, and let's get the S&P up here and see how this is responding to the worldwide contraction. Okay, so we're getting pretty tight movements relative to the S&P. I'm going to pin this over so that we can see what we're doing in Feb 20. Here. All right. Okay, so really tight drawdown relative to the world monetary contraction. It drew down just like the S&P. Similar bottom. Looks like it got a little later bottom and or earlier. Is it here? Yeah, yeah. So it kind of got an early bottom here and a little bit here, and then a little higher bounce on the first part of the bull trap, and then here. This is pretty interesting. It's following the same shape and movements as the S&P, but it's has gone down, not only down during the second half of the bull trap, but it's down below the lows, which there's not very many companies that are below the bottom here. And this didn't get a really sharp bottom. It kind of resisted the bottom and got a little peak here, but this is a serious sell-off here, and this does not look too pretty for anyone holding the stock long. This is not investment advice, but I'll talk about Peter Leeds and George Gammon, I guess, on this one, because Peter Leeds likes to talk about how the entire cannabis industry just has oversupply, and he just doesn't like it long term because of the supply issues. And George Gammon just started mentioning weed a couple of days ago and saying how in a recession, alcohol and cigarettes do well. Those are some of the stable stocks in a recession, but not necessarily during a credit contraction crash, like maybe on the ups, but this is not responding well at all to this credit contraction cycle. So I definitely don't like this thing. This is really hard to know what to do with. I mean, it's hard to short it because the price is low. It looks like a good value price, but it's really hard to tell if it is. I think there's going to be a really good value spot to buy this thing at some point. Let me think about if that would be right now or not. I don't think so because I think we just started another credit contraction move, and I mean it's at $5, so I mean it could be tiny if it got to $3 or something. It wouldn't look that big, but relative to where it is now, I mean if it went down to 3, that's still half, and there there's there has to be a point here where this does become a very good value buy, um, maybe. But yeah, as Peter Leeds says, the fundamentals are not good, and I just looked at their balance sheet, and I don't have their current financials. Their last one was posted 2019, and their cash to current liabilities was like 1/4 or worse. So they are cash poor relative to the debt that they owe on right now. And that debt is about to get a lot heavier if we get another contraction. So I don't think I like this company as a short just because it's down here already. I want to short a company that's up high that's going to get pulled down. And I don't, man, I think it's way too risky to go long on this thing in the middle of a contraction cycle with such a bad balance sheet. I think this company could get in big trouble. And if we look out farther, I think we got this contraction a little earlier than expected because of the health situation, and this is looking like a 4 month, maybe credit contraction cycle. It's usually 2 or 3 month kind of cycle, and I was modeling it about 3 months, but I don't think there's enough time to complete a contraction cycle in 3 months. So I'm going to be watching the MACD really closely and trying to figure out when this thing is reversing and looking for consolidation zones on the timing. But I think that like around June, I don't know, say like June 10th or something is like a kind of a target to end this credit contraction cycle, wherever that would be, somewhere over here. And I think this guy could maybe pull down and bounce and wobble a little bit or something like that towards the end of the cycle. I don't know if it has that much room to go down, but I do think that the balance sheet is a big concern while it's in this credit contraction cycle. And we kind of passed this bull trap phase here that was supporting all the bad balance sheet companies. I think that we're done with that, and I think we're going to get uh, some companies getting in trouble, and we're going to get the Fed buying bonds, and we'll see if the Fed tries to start buying stocks. And everyone says the Fed's blowing up the whatever, but this is a Canadian company, so the Fed is not going to be pumping this one up, and they're not pumping any of them up because that's not even where the money is going. This is not financial advice, but the majority of the money is going to international banks that can't have enough. They don't have enough liquidity to create excuse me, to create loans, and they are now like jacking up their emergency funds for people that are defaulting, and that's where the Fed is pumping money is into these pretty much emergency funds for the international banks to keep the banking system from getting in trouble during this credit contraction. And they're trying to keep liquidity going because the contraction, the banks are hoarding treasuries, and uh, all the all the companies and everyone that owes debt is hoarding dollars, and there's no velocity, and there's decreasing amount of dollars in the whole international system. So that's what this credit contraction cycle is all about. Less dollars in the world system, and it just pulls companies down. And that's what we're going to see here, I believe, on this one as well. And the companies that have really bad balance sheets here can start getting in trouble. So, man, I don't know. I don't think I like this one. I don't think I like this one at all for any purpose because I don't like shorting it here because it's so low. Maybe it's a good. I don't know. It seems weird to short this one. There's a lot of other things that you can short, and as a long, I would I would wait until we get out of this cycle to go long on this one, and it could be it could be a value buy over the next kind of year ish if people are stuck at home. And yeah, and this is like a alcohol and cigarettes kind of industry now where it probably will hold up pretty well in this kind of environment. And I don't think it's going to get a blast off of this reversal like maybe some energy sector companies or some tech. There's certain tech companies that are kind of good for this new environment that I really like out of this reversal. I don't think I'll be looking at this one. I just don't think it has kind of the I don't think it has the kind of the upside, but I think it'll be a more stable kind of long as we get into the next cycles. Yeah, so that's the cycle. We can jump into the MACD. I'm on a 15-minute MACD. That's not very useful. Let's go to the 1 hour and see what this thing looks like. I'm guessing bad. Yeah, so if you look at the Bollinger Bands here, you can see that most of the activity since way back here has been along the bottom edge of the bands. And you're just kind of bouncing off the top and sticking to the bottom, sticking to the bottom. So this is all bearish on the bands. And this here is bearish on the MACD. We're underneath. We're red on the momentum switch, and we're underneath. So in order for this to get bullish, this red line not only needs to turn up, but it needs to get back up into positive territory, which is going to be pretty tough right now. So any kind of wobbling underneath this side of the MACD is going to be bearish. So that's kind of on the weekly time frame out towards the end of the month. It looks pretty bearish. And then we can take a look out on the daily candlesticks, and let's see what this thing's doing. Where's Feb? Here? Okay. All right, so this entire cycle, it's just been sticking to the bottom and hardly even getting across to the top side. So that's, man, wow, look at the bear side activity on this thing. Oh my goodness, this thing has been awful for a long time. The last time it was bullish was way back here. And so I guess this is about as close to bullish as it's been in a long time, but all of this wobbling and stuff on the bottom side of the MACD down here, this is all super bearish, super long-term bearish. And this is turning over now again. This is super bearish. Okay, so this may be a good short. Since it's bearish on all levels, basically, and it has a really bad balance sheet and a contraction, I think this actually might be a good short. And man, going long on this thing's tricky. So, I mean, in order to go long, it needs to cross over onto this top side here, which at some value price it is going to do that. And that would kind of be the signal I would look for to go long on this thing, is movement that looks like it's going to break onto the bull side of these daily candles. And let's check out some longer ones and see what we get. Okay, where are we? So yeah, it's just super bearish here too. It's turning up here, but it's kind of leveling. So, I mean, this one looks like it's gonna go up a little bit and turn over. And it looks like it's gonna turn over way on the bear side on the long term. I mean, this is like year to year to year this thing looks bearish for years and months and days and weeks. It's bearish on every single signal. And here on the Bollinger Bands, it's just completely sticking to the bottom side. That's super bearish. It's not even touching the middle line. So this company looks terrible. Absolutely terrible. All the fundamentals, all the technicals, all the cycles, everything looks bearish. So I think this actually may be a good short, and this company could potentially go out of business with this combination of awfulness. And this could be a short to zero kind of move. Maybe I mean, with like a put option, it could even be like a 2-month put option, or way out, like years long kind of put option, to see if they get in trouble and like go out of business or something like that. Um, they don't have to completely like have all of their factories or anything like get shut down, or I mean, they can just get in enough trouble that they have to file bankruptcy. You can close your options or close your shorts or whatever. And yeah, man, I didn't expect this thing to be so ugly, because I was thinking this might be a good recession kind of industry thing, like George Gammon was mentioning. But no, George, no, this cannabis stuff is not looking good right now for this recession. So, all right, well, hope that was helpful, and I should have a little subscribe thing over here somewhere, and like like button, and more important than the like button is starting up conversational chat stuff in the comments. If you guys would chat it up, that would help my channel a whole bunch. And I think that's it. This is not investment advice, and yeah, I didn't expect this to look so bad, but it looks pretty bad. Like, it looks worse than a lot of things that I actually am shorting right now. So I'll think about that. I may be looking to get a short on something like this. Hmm, that's not. It's weird. This is a weird thing to short in this kind of a cycle. Like, the cycle doesn't recommend shorting this kind of a sector, or yeah, yeah. I still don't like shorting it right now in this cycle, just because it's a weird agricultural kind of staples thing. Yeah, I'm just gonna stay away from this thing, and I don't know what to do with it, but I definitely am not gonna go long on this thing. Not with all this, not with all the cyclical negativity on this thing for weeks, months, years. Man, you'd have to see these lines down here getting across on multiple levels. This thing has to be turning up, and the short term ones need to be up here on this side. No thanks. All right, that's Aurora Cannabis ACB, and happy trading.